Hello and welcome to The Bottom Line here on TVP World, where we unpack some of the main business and economic stories of the day. I'm your host, Marie Kate. Part of the tricky EU-US trade deal includes Europe spending $750 billion on American energy over the next 3 years. As this new reality sinks in, there is increasing awareness of the complexities involving the implementation of this new setup. Jan Kennedy tells us more in his report.
Thank you very much.
Thank you.
It was all smiles after European Commission President Ursula von der Leyen and US President Donald Trump struck a trade deal ending months of tensions between the two sides. As part of the agreement, the EU declared its intention to boost US energy imports to €650 billion through 2028. Experts, however, see this as unrealistic.
If we look at the numbers, we can say that this agreement with the United States is more aspirational than real.
To put it into perspective, last year the EU imported €72 billion worth of energy from the United States. To reach the target of €162 billion annually, imports would need to more than double each year through 2028. Since the start of 2023, the EU's energy imports from the US have already doubled, and von der Leyen hopes that raising imports even further would help Europe wean itself off Russian energy.
We want to absolutely get rid of Russian fossil fuels, and therefore it is much welcome to purchase the more affordable and better LNG from the United States. And there, approximately, our estimation is that we can do 250 per year over 3 years.
But taking Russian deliveries out of the equation wouldn't close the gap. Last year, the EU imported only €23 billion worth of energy from Russia. Still, perhaps the biggest obstacle is that many EU countries are already locked into long-term gas contracts.
Companies, sometimes national but still operating strictly on business principles, sign contracts based on their own market judgment and look for the best offers. A whole range of European companies, including Polish ones, buy liquefied gas from, among others, Qatar. And it doesn't seem like anyone is planning to break those contracts just to switch to American gas.
On top of that, the US faces its own limitations.
The United States export capacity, it is currently very close to its maximum volumes. So of course the United States can try to increase LNG exports, but even if they succeed, it won't happen within 3 years and not within the framework of this agreement.
The US is in the process of expanding its export capacity, with projects such as Plaque Mines LNG, Corpus Christi LNG Stage 3 and Golden Pass LNG set to bump it up by more than 50% in the next 2 years. And the complete list of projects may even triple the existing capacity, but not until 2030, 2 years after the declared deadline of the recent EU-US deal. According to Politico, the only viable path to reaching the €650 billion target involves including the €300 billion of US nuclear investment currently underway in the EU.
As the reality of the EU-US trade deal sets in, keeping to the commitment of spending $750 billion worth of American energy is what will prove to be rather problematic. To find out more about the challenges that lie ahead and why Ursula von der Leyen committed to a clause that seems unrealistic to execute, let's bring in Dr. Sławomir Raszewski, Senior Oil and Gas Lecturer at the University of London. Welcome and thank you very much for joining us.
Thank you for having me.
So maybe let's set the scene first with the significance of the amount of the $750 billion energy deal that the EU has agreed to. If it is viewed as unrealistic on both sides of the Atlantic, because that is what we hear now, why did Ursula von der Leyen agree to it?
Well, yes, absolutely. This is something unprecedented, and indeed the value we're talking about here, it's staggering, it's massive. And we need to think about the bigger picture when you think of why the European Union decides to hold such talks. And I think that the main rationale here is probably twofold. First of all, we are now in the midst of, if you like, trade war waged by the US, and there's a very clear rationale here to kind of come up with a proposal in order to, if you like, soften the US's stance. I mean, this is what Japan did when they reciprocated by offering investments in US energy sector in exchange for more favorable treatment, if you like, in those trade talks. And I think that the EU is doing that. So this is the first of the two. I think the second rationale is very clear, and it's been ongoing for a long time now, namely trying to, if you like, reduce dependence on traditional suppliers of energy to the European Union historically, and still is the case. Of course, it is very much has been Russian supplies, but now we also have, if you like, new challenges. The biggest supplier of natural gas, for instance, to the European Union now is Norway, and then this creates new pressures on the Norwegian exports to Europe, and I think that these two elements are very important. So the first one, as I mentioned, being the trade talks negotiation and trying to bring something to the table, and the second one, security of supply.
Now, $750 billion over 3 years. Let's provide some numeric context to this. Let's bring up a visual. We see that in 2024, the EU imported $70 billion worth of energy. We have our figures in euros here, but we get the idea. And to take that up to $250 billion a year is more than a significant jump. So if the EU drops all its other suppliers, is it even realistic?
Well, I think there is no reason to believe that EU should drop other suppliers, because indeed smart energy policy is about diversification of supplies, and this is always has been on the table. So ensuring that EU has as many reliable suppliers as possible. And of course, US at the moment is still not the largest supplier. It's the Norway, which is the largest supplier of natural gas. Russia combines still pipeline gas and LNG supplies probably come second, and US supplies come third. So there's still a lot of space, if you like, for maneuver here to increase imports from the US. But if you look at the values, I think, yes, it is very staggering. That's why most of the commentators commenting on the numbers in dollar values have been suggesting that this is not feasible. What is interesting is that this is to happen the next few years. And of course, there's only add to, if you like, questions over feasibility. Is it possible? We have to remember that the US is indeed constructing new LNG terminals and is hoping to boost those investments and attract investments.
Well, that brings me to my next question.
If you like, a reality behind this.
Sure. This brings me to my next question, actually, the subject of logistics. Like you say, the US is attempting to boost its logistics. I want to bring up another visual here, which are the US LNG facilities in the Gulf of Mexico or the Gulf of America, whichever one prefers. So we see here that there are some existing facilities, and then we have those that are being commissioned and under construction. And so what aspects of the export logistics do you think will be the most challenging? And I just wanted to add to my question that there's a Reuters report that suggests that by 2030, America will actually triple its capacity when it comes to LNG production and delivery. But the point is that for this particular deal that we're looking at, they just won't have the capacity to deliver in terms of what it wants to actually import to Europe, i.e. the EU will simply not be able to import the amount of energy that it's looking to get, even if it were to fulfill this somewhat unrealistic energy deal. So what are your thoughts on that?
Well, absolutely. So we have two things here. On the one hand, we have the export capacity, which has to increase. And of course, you mentioned those terminals that are planned but still delayed. One of the most advanced projects have been the project, the Golden Pass project, which has been delayed. So at the moment, we're still talking about the usual outlets in Corpus Christi and in Sabine Pass. But we also have the other challenge on the European side, namely the import capacity. So I think that going forward, there has to be, if you like, win-win approach here. So ideally, looking at what the US probably wants is to increase investments in upstream production in the US and the export capacity. And this is indeed the case with South Korea, for instance. South Korea has committed to investments in production in the US and export facilities. And I think that this is what the US partners will probably want from the European investors. However, here we have one big challenge. The European Union has been championing its climate policy over the years. And indeed, this may go against the objectives of the climate policy.
And now moving on to another aspect of this. What about the other ongoing energy contracts that the EU has to fulfill? And now, how is the EU going to juggle the other contracts that it has, for instance, with Norway or Kazakhstan? Because this is not a case where it can just drop those contracts and just take on the US.
Yes, absolutely. There's a lot of complexities here, and we won't be able to find sort of one single bullet approach to this. And indeed, I think it was mentioned earlier on that nations themselves have also strong preferences for diversification of supplies. For instance, in this part of the world, in Poland, the focus has been on Qatar. Qatar has committed to doubling its production. And indeed, Qatar has been seen as a safe supplier, as a reliable supplier. So I think that there has to be a probably pragmatic approach to US supplies. And the reality is that probably it's not going to be as rosy as it has been presented, but it's probably a positive sign that we're starting talking about natural gas, because natural gas is indeed the energy transition.
And it's also one thing for the EU to strike a deal with the US and to agree to purchase $750 billion worth of American energy, but the EU per se cannot force its member states to purchase this US energy. So what is the impact of that, and how binding is this deal?
Well, I think this is the political statement. If you look at the discussions, ongoing discussions between the US and the EU, we have to treat them as a political statement. I think that this is a positive sign. It means that we are kind of getting back to kind of a balanced approach with energy and climate policy. But also we have to be realistic that a lot will depend on state preferences, a lot will depend on what nations within the European Union want, whether we can have a coordinated approach to it. But also we have to remember that energy supply security, it's all about diversification. So just like in the past, Europe was too dependent on Russia, now it's kind of swapping its energy supply demand for energy supplies on other countries, which might not be sustainable. So it's good that we have additional sources of supply in the pipeline. However, it doesn't mean that US should or could become the sole supplier of natural gas, because that would effectively go against the objective of a well-crafted energy policy.
According to Politico, there's some coverage that suggests that the only viable path to reaching the $750 billion target involves including 300 billion euros of US nuclear investment, which is currently underway in the EU. What are your thoughts on that?
Yes, I would definitely agree with that. If you look at the values, and you presented it, and I couldn't present it any better, any rise of 9-fold or 10 times increase is unrealistic in terms of hydrocarbons. We're probably looking at some significant investments in nuclear energy, and nuclear energy projects are usually very costly. So this is probably going to be a large chunk of the amount that is being quoted.
And another detail of the deal that is worth noticing is that it's all about the pre-agreed value as opposed to the volume. So $750 billion as opposed to the commitment of a certain volume of energy. So it's dependent on global energy prices, which is unpredictable in many ways. Can you tell us a little bit more about that and how it might influence the deal?
Absolutely. So if you look at the global picture, obviously European Union energy demand it's fairly flat. So there are obviously seasonal differences. So usually closer to winter, there's more demand for, in this case, natural gas. But overall, Europe is not the most attractive market, if you like, for suppliers. So Asia Pacific is. I mean, these are the largest economies, the largest countries in terms of population and demand. So a lot will depend on, when it comes to prices, what happens on the global market, because we are now moving away from a standard which we have lived through in the last 20 years in European Union, namely natural gas supply by pipelines. Now we are shifting away from that model to LNG supplies. And this means that we'll be more dependent on prices shaped by fairly global market or globalizing market, if you like. So a lot will depend on the demand in, let's say, in China, for instance. This, of course, adds a bit of uncertainty, market uncertainty, but at the same time offers a unique opportunity for exporters.
And we've been living through a time of a lot of uncertainty, especially in regards to international trade. We awaited this deal between the US and the EU for quite some time. What are the consequences of the energy trade not being implemented?
Well, I think energy trade is in a sense a usual suspect. You know, that's what we expected this deal to be about, for the reason which I mentioned, to have a degree of influence over the trade negotiations and fighting for a lower tariff, if you like. Now, is this tariff a low one? Well, there's been all sorts of discussions about it in the media. It's not very low. But on the other hand, I think we all know that Europe doesn't have its own production or doesn't have significant production. And I think that what should be now at the forefront of policymakers is to probably think about or think hard how to add a third element to this equation, namely domestic production of hydrocarbons, most notably natural gas. So I think that the deal is one thing. Whether it's going to be fully implemented or not, we don't know. It's a political statement, but nation states as well as European Union should also encourage more domestic production to try and offset the imports.
And in terms of the bottom line, just 30 seconds, what do you think the impact of this deal is for the EU? What does it mean for us?
Well, we don't know. We don't know what's going to happen because, as we said, this is a political statement. As things stand, it looks highly unrealistic. But I think it's an important statement for as far as the Europe is concerned, that indeed there are exporters that want to export to the EU, which is, from the security of supply point of view, a fantastic information. But we shall see. And in the coming years, we should probably focus carefully on this projects under construction. Are they moving forward? Are they not? We should also focusing on what's happening with investments by South Korea and US. Are there energy companies, European companies investing in the US as well? And this will probably tell us how feasible it is.
Okay, Dr. Sławomir Raszewski, Senior Oil and Gas Lecturer at the University of London. Thank you so much for joining us today.
Thank you so much.
And that concludes the bottom line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. Goodbye.